Welcome back to IBTV's The Marketplace. I am Larry Shover, and today joined by two very special guests from A&A Hedge Fund. To my left, Al Sherbin, and to his left, Anthony Vitale. Welcome.
You can call me Tony, Larry.
Thank you. Okay, I will. Call me Tony. So A&A Hedge Fund, how'd that come to be, like the name, and what do you guys do?
Well, we, as a hedge fund, we do a lot of types of trades. We do a lot of risk arbitrage types trades.
Interesting.
So M&A, rights offerings, stub trading. We do a lot of option trading. We do a lot of skew, volatility style trading. So the name, Al and Anthony, we thought about Al and Tony and couldn't make those letters work.
It sounds like AMP, the supermarket, and no good. So, but thank you so much for joining us today. So here on today's The Marketplace, we're going to be talking about a segment that is really old, but also really growing, and that's securities financing. We know it's a big industry, and for IB, also the stock borrow loan program. What do you think about that?
Well, I think there's a lot of opportunity in stock borrow and loan. IB has one of the broadest bases of securities that we can borrow. And so that's a huge advantage to a hedge fund like ours that gets involved in a lot of deal type activities. So we're going to look at IBTV's stock borrow and loan today. We're going to look at the advantages. We're going to look at how we use it.
Now, before we get into that, though, I just really need to talk about the markets. So many people look at the VIX. And we talked before, and we know that VIX, it's a tool, it's one tool, but you shared with me that you'd rather look at interest rates with regards to the equity market. And why is that?
Well, as a floor trader, we always said the smart money's in the fixed income and the dumb money's in the equity. And of course, I was an equity trader, so I was in the right spot for me. But basically, we look at what's happened in our marketplace of late. We have what people like to call the Trump rally. I mean, we're on a 6-year tear to the upside, actually more than that at this point. So we've had that rally, but we saw an accelerated move to the upside after the election. And the premise of that is that the new administration is going to increase activity, lower regulation, lower taxes, all positive things. So the stock market has rallied, and the bond market, more importantly, has sold off, meaning higher interest rates. That's a good thing. That means more activity, a little bit more inflation, things of that sort. Now, with the latest news that we had a little hiccup on the health care plan, people are starting to question, can Trump get this done? Can he get taxes cut? And that's the next shoe to drop. So we're starting to see a lot of, questioning. Well, the bond market, again, the fixed income market is where I'm focused to see it. The bond market, it had fallen steeply. Interest rates went up, and then it kind of reversed a little bit. Now it's kind of bouncing around in a range. And I'm actually, Tony and I are scalping back and forth in that range, having a little fun. But if the shoe drops, if another shoe drops, if they don't get the tax plan through, then I think what we're going to see is we're going to see the interest rates fall first, and that's going to lead the stock market down.
If many people aren't familiar with the stock loan program, but especially with IB's pre-borrow program, which I find absolutely fascinating. And I'm wondering, Al, if you just can give us a quick overview first, like a 30,000-foot viewpoint on the whole stock loan process before we get into IB's tools.
Sure. So I'm going to take you back in time a little bit. It used to be, the stock borrow and loan world used to be a little bit of the Wild West. People were doing what they called naked short selling. It really means that they are lending stocks that they don't have. So short selling in and of itself means I'm selling a stock that I don't own. But let's look at an analogy. You come to me and you want to borrow a hammer from me. Well, I don't own a hammer. So naked short selling would be, you can borrow the hammer. You set up your project. You come to me, I don't have a hammer, the nail's in the board, and you use your forehead. If I'm going to do a stock borrow and loan program, in 2005, the government came in and said, look, you can't do that anymore. And they put a regulation called Regulation SHO, Regulation SHO. And that was there to stop naked short selling. It said, if you want to sell a stock short, you need to borrow it first, pre-borrow it. There were a few loopholes in it that they plugged in 2008, but that was the origination of the law. And so what happens is, you come to me, you want to borrow a hammer from me, I don't own one, I run over to Tony and say, Tony, can I borrow a hammer? And he's like, I got 2 of them, you can have it anytime you want. Now I come back to you and I say, sure, I'll lend you a hammer, okay? But it's going to cost you a nice dinner.
And
it's good. I get paid. It's his hammer.
And I suppose the question I would have is that there's a limited supply of hammers in the world, right? It's not like Tony can come up with an infinite amount.
Right, and the less hammers there are, he may charge me for that hammer. But the whole premise of stock borrow and loan is that I have to make sure I can borrow from him before I can sell to you. In this case, I'm talking lending, but in the stock world, I'm selling a stock that I don't own. But I have to borrow it first, to pre-borrow. That's why we have a pre-borrow scanner. We have pre-borrow tools at IB so that we can see what's out there. We can grab that stock ahead of time. We know if we're going to have to pay for it. We can build it into our analysis and we can make the trade. And further, big problem. I lend you Tony's hammer. He comes running over and says, I need that hammer now, and grabs it out of your hand as you're about to hit. Well, that's a huge problem. And you know, as an old floor trader and as a trader now, that being bought in on a stock is always painful. It's a terrible thing. You don't want to have that happen. So we pre-borrow, we lock in a rate, we make sure we have it for the life of the trade we look at.
Yeah, thank you. And you know what?
And that's called a buy-in.
Yeah, so I know what a buy-in is, but thank you. I felt those before. But this is the reason why it's so fascinating that both of you are here, because what IB has done with these tools is just unbelievable compared to the competitors that are out there, or how the whole stock loan program has worked in the past. And with that, can you just run through a trade that would demonstrate that, just from a entry level?
So one of the first things that Al and I do is we go into the advanced market scanner, which is easily accessible on your platform. We plug in $10 as the minimum price for underlyings that we look at. As far as volume, we try to find something over 100,000 shares that get traded. And then we go down to shortable shares. So as you can see, IB has a way to go here, shortable shares, search, and these are the stocks that have come up.
And these would be the ones that can be borrowed.
Well, as you can see in this column here, shortable shares.
Interesting.
That's what's out there in the marketplace. So what we like to do is we look at the top 10 that are out there as an initial stock selection, and then we do a deeper dive into the research and see if there's something that we like. And Al found something that he liked.
I did, down there at ACIA, Acacia Communications. This is a stock that hasn't been around for a long time. It's been through 2 earnings cycles now. So when you have a stock that first, as you know, first comes out, it's kind of the Wild West. Nobody's quite sure how to value it. This one had its first earnings cycle and rallied 41% on earnings. And its second one, its more recent one, it fell 14.8%. So it's kind of all over the board still. It's in the cloud communication, or the cloud area. It's called Acacia Communications, but it's in the cloud realm. And I follow a lot of the cloud stocks. I follow the metrics of cloud. It's a huge growth area. I like the stock. But we had a big, sharp dive here, as you can see on earnings. And now we're seeing somewhat of a rally back. Today it's having a soft day. But because of the the gap that it needs to fill to get back up where it was, I just see this stock as still having a bullish premise. And when we do the option analysis, well, first let's go to the skew. Take a look at that put skew there. You see how steep that skew
amazing.
is. So what that means is that you have to pay a lot more for a downside put, an out-of-the-money put, something below the strike, than you do for an upside call. The skew is extremely steep. And so we've carved out a trade. We looked at the stock borrow and loan. We know that we can pre-borrow, and we know that we're going to pay a high rate. Tony, you have a view on the rate here? So right now, to borrow it, we have to pay 45% just to lock in that stock. So we took that interest rate, we pulled up the option chain.
And so the trader is paying 45.72% on an annualized basis, and they need to obviously analyze that for the lifetime of their option strategy.
Right, exactly. So if I'm looking at a trade in May that has 44 days to expiration, I'm going to take the 45%, multiply that by the price of the stock. I'm going to then multiply that by the number of days divided by 365. I'm going to annualize it. And that's my cost. And that amount is part of the cost of carry. In most instances, since there's no cost to short stock, we don't really worry about it. We call it frictionless. And so when we do what we call a synthetic future or a reversal or a conversion, we price that off of the basic cost of carry, which is cost of carry, the interest rate for owning a stock minus the dividend.
Sure.
Well, now we have this huge cost, so we have to adjust our carry. So I adjusted the carry and then looked at the skew, and I
Interesting.
still found that we had a steep downside skew and a less steep upside skew. So what we decided to do, we're bullish on the stock, we put on what's called a risk reversal. We bought some May 60 calls, we sold some May 50 puts, and in doing that, that's right now has a delta of about 68. And so for every one share, one option trade, buying one call, selling one put, we would want to sell 68 shares to be what we call delta neutral.
Sure.
But since we're bullish, we want to sell 50 shares. So what we're going to do today is we're going to buy 4 calls. We're going to May 60 calls, sell 4 May 50 puts, and we're only going to short 200 shares of stock
Okay,
against.
so you're under hedging.
We're
Yes.
under hedging because we have a bullish premise.
Okay.
Looks like you got filled there.
Yep.
Looks like you're filled, huh?
So you bought the call. You want to sell the puts.
So now I'm going to go on the put side. So I'm going to sell the 50 put. And we'll go in at 3 1/4. I'm going to do that 4 times.
I've noticed that IB gives you a chance to decline it. So to avoid like a fat finger,
Yeah.
something like that. That's good.
You can take those off if you check mark the box to the
say,
left.
don't show it again.
But
Sure.
for this purpose, we
I'd
want to
keep
leave
it
it
on.
on.
I'd
Yeah.
keep it. So you have this trade on now, right?
And so now we have to go into the.
We need to sell some shares. We need to pre-borrow first.
Al, while he's doing this, do you think that we know reversal and conversion markets are, hugely influenced by hard to borrow stocks,
Right.
but do you think it also affects skew?
I absolutely do. Think about what a market maker would do. So when we were on the floor,
Yep.
And we were a market maker, if we sold puts, we would sell shares.
Sure.
If we were to buy calls, we would sell shares, right? When it gets hard to sell shares, hard to borrow, we have to
Yes.
pay to borrow that
Yes.
stock to short it, then I want more money for those puts.
Yeah, even the
And-
25 delta put.
Right, absolutely. And
Yeah.
I'm going to pay less for the calls because I'm going to have to pay on my short stock. So you see the reversal market change.
Interesting.
And that's why earlier on I said that I adjust my basis before I do my skew analysis, and I adjust the basis for the cost of carry at
Interesting.
45%.
And that will change your whole curve.
Changes the entire
Thus
view.
the skew.
Right,
Yes.
absolutely.
Thank you. Yeah.
So I just wanted to wait for you guys to finish before I hit transmit, Joe, so I could take you through the action. So even though we did 4 calls and 4 puts, we're only pre-borrowing 200 shares.
Right, 50 delta, which
And as you can see by the green bar here, our order is in. And now we're waiting on the
stock.
there's continuous trading in stock borrow loan. So if you don't get filled initially, there is another auction market that will be available to us.
This is not for a small retail investor, right? Or, like the notional value to even get involved in this is probably more than $500.
You do need portfolio margin. I think we also just saw a video on how to get the permissions to get into stock borrow loan.
Okay.
That's all something that everyone who does want to get into this area would have to do first.
Interesting. Thank you. It looks like we got filled on the stock.
Those are all the options.
Yeah, we're still waiting on the stock.
Okay.
So the order is in, and as I said, there are continuous auctions.
And it's active.
Tony, the stock loan program, it's evolved. IB's value proposition seems to be a lot different than from when I was on the trading floor. How does a guy like me find out more about it?
There's a ton of information on the IB website for anyone who wants to get into stock borrow loan. All the details are there. When we first started with the program,
Sure.
Same thing. We wanted to match the knowledge that we had about the markets with how to utilize that with the trading software. And IB
Interesting.
does a great job with that.
Yeah, for all the traders on the floor from back in the day, I think we would have given anything to be able to know that we're not being bought in
Right.
the next morning. Wow, that was great. Up next, we will take your phone calls with regards to any question you have with Interactive Brokers, especially when it comes to the stock loan program or their stock borrow trading tools. I want to especially thank both Al Sherbin and Tony Vitale, guests from A&A Hedge Fund. I am Larry Shover from IBTV.